Hi, welcome to Neppy Invest. So, 5 more companies that are on my turnaround watch list. So, my turnaround watch list is starting to dwindle in numbers just because the overall market's been quite bullish. And so, those companies that have been in long-term downtrends and look like they're turning around are starting to decrease in numbers. But there's still quite a few companies that are on the watch list. I'm always on the lookout for more companies. Just because the overall market's going up doesn't mean every single company is doing that, as A2 Milk shareholders can attest to. So let's get into it. And the first company on my turnaround watch list that I'm going to be talking about in this video is Jamtrack. Now, for disclosure purposes, I did take a position in this company very recently, December 18, at $1.41. So Jamtrack, I did hold this company way back in 2016-17, then I did sell out. And it went on a bit of a bull run. Share price went from $2 all the way up to nearly $7. And then bad things happened to the company, a few profit downgrades, and you can see the share price went from about $5 all the way to $1 in a few months. So not looking at all very healthy at the back end of 2019 and towards March in 2020. It seems like $1 was a good place to buy. You can see a lot of selling around those levels too. Now, with a market cap of 141 million and operating cash flow of 21 million, if they can sort of maintain that operating cash flow in the next few years, this means this company would be cheap. Management have suggested they're not going to be profitable this year, but they are potentially being conservative with their forecast. And if they are being conservative, that means the chances of a profit upgrade actually do increase. Now, if we look at the last 6 months in share price action, it's starting to see a bit more of a bullish signals here. We are seeing the share price above the moving averages. So I've got the 100-day, 50 and 25-day moving averages here. And this is what I want to see. Probably the best sort of price action here. I think the rise from $1.10 in the start of November has been a little bit too quick. I'd rather see that be sort of more of a gentle rise. But the share price now in between $1.40, $1.50, it is in a zone of resistance. If you go back to August, September this year, we did see the share price get to that level and then pull back. And I think there's quite a few shareholders who did buy into that price range who can now sell out at a break even, sort of a psychological thing. People do think if the share price goes below their buying price, they can sell out if the share price comes back up. Now, with it being cheap, I think this is a low risk entry at $1.41. It's a price I bought because if it goes towards $1.30, $1.35, that would be a sell signal. If the share price gets above about $1.55, that would be very bullish. So keep an eye on this one, and I could sell out fairly quickly if the share price tumbles in the next week. The next company is Wagners. So, yeah, not that TV show, what was it called? Wagners versus Wagners or whatever. Anyway, Robert Wagner, I don't know. Anyway, this is a concrete company that comes out of Toowoomba. They do have, I don't know a lot about what concrete they do, but it's sort of a next-gen concrete, an improved concrete. And when they did IPO in late 2017, the share price went up to $4.50. Never since then, the share price has been tumbling back. Went as low as $1 or as low as about 60 cents or so in March of this year. Now, with the market cap of 353 million, they have a lot of revenue, 250, but only operating cash flow in the last financial year of 1, which does suggest their margins are quite low. But if they do have a next generation concrete that is successful, you would think those margins would increase because they would be able to name their price, especially if they have some IP around it and some, some patents around it. So anyway, so this is the weekly chart going back 3 years, and no bullishness around this. It could be at maybe a high here. If you take a bit of a trend there from the high back in 2018 and the high in January 2020, if you connect that line as a trend, maybe it's just broken through that. So that could be the buy signal here with Wagners. But if you look at the daily chart over the past about 3 or 4 months, a very bullish signal here. In fact, the run-up in September, October, you can see it went from $1.20 all the way up to $1.70 or so on a few days. And that bullish run-up will attract profit takers. And then we saw the share price retreat all the way back to $1.20. that would have been the ideal price to buy. So if I was following Wagners at that point, I probably would have bought in $1.20 because you just see that wick, that sort of that, what do they call that? The with the long wick, I forget what they call that. With the long wick, that suggests there is quite a bit of buying pressure on that day. So, and ever since that day, we've seen the share price just go through the roof from $1.30 all the way up to $2.20. So that would have been a perfect trade to make. The last few days of trading, we've seen the share price pull back from $2.20 to $1.85. If the share price can get to about $1.60, $1.65 or so, that would be a really good time to buy in if you are bullish on Wagners. So another company that's on my watch list, and I'm not following this closely, but it's a company I am having a look at. Next company is OMH, Ohm Holdings. I don't know how to pronounce it, Ohm Holdings or something like that. Anyway, this has been in a long-term downtrend as well, and this is the daily chart since January 2020, so it's probably a year daily chart. You can see, just looking at that blue line, which is the 100-day moving average, the share price has been below that consistently. Moving averages, all the other two moving averages have been below that until the last few weeks. And we saw a massive up day where the share price has zoomed from about 34 cents to about 38 cents or so. And then we've seen consolidation between about 39 cents and 44 cents. So that's actually quite bullish. Not a lot of selling to take some profits. So that's actually a very bullish signal. Market cap of 310 million. Revenue of 878 million. Operating cash flow of 101 million. Now, those numbers alone in isolation, that would be very attractive to have. Operating cash flow of 101 million with a market cap of 310. That's suggesting we have 3 times operating cash flow. That's very, very cheap. Now, they do have a lot of debt. I'm not exactly sure how much debt, but a lot of debt. So the enterprise value is considerably higher than that. Something, I think it's maybe towards, not quite $1 billion, but it's more like $800 million or so. But if you do look at the weekly chart, if you go all the way back to 2018, the share price did get to about $1.60. You can see just this long-term downtrend. Share price then consolidating just below about 40 cents for the last about 5 or 6 months. And then it's broken above that. You can just see the last few weeks, it's just broken above that consolidation. So this could be a good buy if you're keen on this company. So this is another company I've put onto my watch list just because they've just broken through this long-term downtrend. Very exciting times for any OMH holders. The next company is Ainsworth. So Ainsworth and Aristocrat were sort of, I'm not sure if they probably are competitors, but I remember about 7, 8 years ago, all the rage was Ainsworth over Aristocrat, and then it's just, flipped, and all the rage was all about Aristocrat, and then Ainsworth just went through this long-term downtrend, which has turned violently to the upside over the past month or so. You can see the share price went down all the way down to about 28 cents or so, and then has risen all the way to 54 cents in a very short period of time on fairly bullish volume as well. I don't think there was any significant announcements in that time, so I'm not sure why. There's been a lot of buying. You can see the market cap 182 million, revenue 111, operating cash flow 17. So not overly cheap, not overly expensive either. But if you look at the weekly chart going back 10 years, you can see what I was talking about. If you go back 7, 8 years ago, this went through a violent uptrend. Share price went from about 30 cents all the way up to nearly $5 in a few years. And then ever since that peak in share price in late 2013, early 2014, about $4.75, it's been going down and down and down. No reason to buy in. The share price, even on the weekly chart, is still in the downtrend. So even though it's been very bullish on the daily chart the last few weeks, it's still in a downtrend on the weekly chart. So there's another company I'll put onto my watch list, but I'd like a period of consolidation, and I'm just concerned that this price action has been too bullish, and there's going to be some price takers coming in, and that should force the share price back through the next few weeks, unless they release a fairly bullish announcement. The last company is Maine Pharma. This is another company I've owned in the past. A market cap of 596 million, revenue 457, operating cash flow 100 million. So they're in the drug distribution, manufacturing sort of space, especially in generics, if I believe. But not only in generics, they have their own drugs too. Now, that sort of space has gone through some difficult times over the past few years because of competition, that sort of thing. And the Maine Pharma share price has taken a massive hit. The reason I put this onto my watch list is there's maybe the first signs of it turning around recently, but I'm not putting any faith in this potential turnaround. I have to see the share price get above 38 cents for me to get keen in Maine Farmer at the moment. You can see why when you look at the weekly chart. So we did see the share price reach a peak of about $2 way back in 2016. It looked like there could have been a bit of a turnaround in 2018. Share price went from about 60 cents all the way to just above $1.20. That's when I bought in, and I sold out just a few weeks later. So I sold out about 80 cents. So I bought in around 65, sold at 80. So lost a bit of profit there because I sold a little bit too late. But ever since then, it's been in a long-term downtrend. Share price bottom has been 20 cents, but there's no reason to buy in yet. But the daily chart is just showing possible signs of a turnaround. And this is sort of a company just based off the revenue they're making, the market cap and operating cash flow. If things do turn around in their sector, in their space, this could be an interesting company to buy for the extreme long term. So those are the five of the companies that are on my turnaround watch list, not the only 5 companies. I hope you've enjoyed this video. If you have any questions about these companies, if you're a holder of any of these companies, leave a comment. And again, I'm not a financial advisor, so if you do need financial advice about your own financial circumstances, make sure you seek out someone who is qualified and can speak to your own financial circumstances. Have a good day. Talk to you later. Bye.